Hello, I'm Andy Prosser. I'm the Head of Investments at InvestEngine. Welcome to our weekly Markets Roundup, which is your quick look at what's been moving the markets and what it means for investors. So this week was a positive week for markets. We had good news both on tariff negotiations and on company earnings. So on Wednesday, we heard that the US had struck a trade deal with Japan, which lowers the US's tariffs on Japan from what was going to be 25% down to 15%. There were a couple of other provisions in there as well, including a $550 billion fund for Japan to invest in the US. But the main message really was that Japan will face lower tariffs. This was obviously good news for Japanese equities, which were up 4% this week. And global markets also got a lift as well because the Japan deal gives other countries reason to believe that they could also get a deal before the August the 1st deadline. And that carve out for Japanese vehicles as well kind of suggests that there could be room for negotiation on specific sectors for other countries as well, which would obviously be beneficial. As well as that Japan deal, the EU have reportedly sped up the pace of talks over the past week, and they're also moving towards an agreement that would set a 15% tariff for most products, so kind of similar to Japan. Outside of tariff news, we're also getting deeper into earnings season now. And this week, Alphabet, who are Google's parent company, they reported better than expected revenue, thanks to demand for their AI products, and the stock rose over 3%. That kind of positive AI sentiment also pulled up all the other AI stocks as well, which was obviously good news for the overall market because they make up such a big portion of the market now. In Europe, optimism surrounding a potential trade deal meant that the European market had another good week this week, as it continues to be the best performing major market this year. The combination of earnings and trade deals then meant that both the US and the UK reached new all-time highs this week. Although slight caveat, for the S&P, this is only when you measure the performance of the S&P in dollars. So because the US dollar has weakened by about 8% against sterling so far this year, although the S&P is up 9% in dollar terms, it's still up only 1%-ish in sterling terms so far this year. Looking back at the last week though, markets overall had a strong week this week, and although some of that gain was reduced for us sterling investors because of a bit of dollar weakness, investors should still have seen a healthy gain in their portfolios. If you have any thoughts or comments, feel free to leave them below. Otherwise, for more updates, head to our blog, sign up to our newsletter, and we'll be back next Friday. Thank you for watching.